Trade Genius.
What's up, guys? Welcome back to another Trade Genius podcast. I'm here with Bob Kudla, and I'm Philip. And so today we're going to talk about the FAANG stocks. And as you can see by the title, we think they're toothless. So, Bob, what's going on with the FAANG stocks? Why are they so toothless these days?
Yeah, I think you find this really interesting, Phil. A lot of people are like looking for bottoms in the market, and we know from looking at other sectors that have went parabolic and
Mm-hmm.
they start on their downslope side of things that you get these we get you get the micro bear market rallies like in stocks, but you get an Eiffel Tower effect in the stocks themselves, and you get these rallies that you think, hey, they're going to start something new, but that's not the case. And what really prompted me to think about doing a video like this today was, you know, the third quarter reports are coming out for a lot of the FANG stocks, and they're blowing up today. And I don't mean blowing up in a good way. I mean they're missing revenue and they're missing profit. And we can talk about those when we get into each of these charts. But what I wanted to alert our readers to, the fact is that some of these FANG stocks have a long way to go to be able to do what we call the Eiffel Tower effect. When a move goes parabolic, you go back to kind of the start point in the left side of the Eiffel Tower, and the right side either stops at 78, goes basically a double bottom, or extends down to minus 1.2, and
Those are Fibonacci levels.
Fibonacci levels. Yeah,
Okay.
thanks. Sorry for the jargon. And we're on our way with most of these. Somebody's already hit them, and show you what happens once they hit them. They're basically dead money, and you need to move on to another sector. So those are what I want to show you today, Phil. I think you have some thoughts on this too, and I thought we can go through I call them the FANG T and plus M, and so we can kind of go through those stocks today.
Okay, FAANG T plus M. All right, well, let's dive into the charts then. All right, so we have the meta chart up. All right, Bob, so tell us what's going on here.
Yeah, so they just reported today. So this is after market action. I don't have aftermarket turned on here, but they closed regular trading hours at 1:30. They're right now at 104.80. And you like my cursor here? It's designed for people like me that can't see anything, or all the complaints I get for Bob. I can't see where the heck you're working on. But Meta platform is META. People are interested in that, and this is a weekly chart. But what I want to show people is that Meta is now a broken stock. Okay, and I'm looking back for the 2019 area. This is kind of where I look for like this latest lift off in the market. This is the 2020 pandemic blip, right? And then this is the parabolic blowout right here. And so it actually has come down and has double bottom, and now it's breaking down. And then what we can look for in area here, I mean, just scare the children time. The fibs tell us that we bring $62 into play on Facebook. So pretty wild, and Phil, we use fibs a lot and at Trade Genius, and on a weekly chart, that's a pretty big move here. So what I would say to anybody here is Facebook's a sell to rip until it gets down to $60. They're burning cash up. They're malinvesting. They're in an industry now that they're in ad revenue. It's a big problem, and people aren't spending money on ads. And now you have a situation where their primary market's drying up. The new area where they wanted to pivot to is either too weird for old people, too goofy for young people, and advertisers don't understand it and they're not investing in it. So I think they're literally gonna go 50% lower for when they close today.
It's intriguing because that's literally wiped out the COVID dip.
Yeah, I didn't even notice that. And that's one of our tells, right, for putting lows in. We got to test that COVID dip low. And now it's really painting an inverse cup and handle. Check this out. So here's the handle, here's the cup. Now, obviously, we can't go negative rates, right? Negative price, but
Right.
it's basically telling you there's a lot of pressure. There's nobody wants this stock.
Yeah,
And
that's pretty telling. Wow, that's in bad
yeah,
shape.
and really what we care about these is they're in the S&P 500, and it's market cap weighted. And so it drags on the S&P as we go forward.
Okay.
So with that, Phil, I'll move along here so we're not here for 400
Yeah. Yep.
hours.
Yep.
So I'm going to go to Amazon.
All right.
And if you notice, we can't call it fangs anymore. We have to call them mangs because They changed their stupid name. Here, a mistake that Facebook made. They went away from their core business. So Amazon is in a similar, what I would call a sister business to Google and Facebook or Meta, is that they're primarily consumer facing, and you're getting a lot of pressure on Amazon. I think Amazon, people have love it, hate it, love Bezos, hate Bezos, loves it, politics. But be that as it may, Amazon has done a really, really good job innovating, unlike what Meta's done. And I think that's held their stock price higher than normal. They pivoted into business with AWS. They're not afraid to push into areas, and they have a blitzkrieg mentality. So if they find something that works, they push hard into it, and they try to capture the space. But eventually, this is going to come back down too. So, the 2020 low on this thing is down here, at 80.59. And again, these are failure moves here. Look at this. It's holding up, then broke down lower high, came up lower high, trying again. And if it breaks this area here, it's going down to $95. So again, I think Amazon is also a broken stock. And it's an area that, again, is going to put pressure on the S&P 500 until these things wash themselves out, either here, or they come down double bottom, or they go down and even go test the fib extension, Phil.
Man, I think I'm smelling a theme here, and it's going to be whatever these stocks COVID lows are is going to be a giant magnet for this bear market.
Yeah, and you've called this out. People tend to want to get people naturally want to be bullish. I think our audience is probably bearish in general, just because of the grief we've gotten over people telling us that we were wrong when we've been right. And I'm talking the big we of our group about a lot of things that are going on. But, you don't want these blow-ups, but we have to get through this so that we can get the next sectors that are going to move higher. And, as we'll call those things out for you guys, because there are a couple sectors that you need to be pouring money into right now.
Yeah, most of our viewers and listeners are pretty savvy because they've been, following along, and they know the situation versus what the headlines are saying.
Yeah, you can't lose. So Apple's the one that everybody should watch every day, because Apple is the market, okay? Yep. And Apple has put themselves in a situation where they are totally customer dependent on a prestige product at a high price point in an environment where people have to borrow money to buy their products, so the lease costs are going to go up, and their innovation has dried up. I don't know about you, Phil, but if I walked in the door and I wanted to be your product development person, I said, this is what I've accomplished over the last 5 years, and this is the industry we need to go in, you'd throw me right back out on my ear. And Apple's been living on the fact that they're the number one, or at least the top five, as they switch back and forth in terms of market cap. And the dirty little secret about the market is that market cap weighting is how these indexes operate, especially S&P 500. So Apple can drag the market up, but when Apple starts falling, it drags the market down as in an basically an overweighted fashion. And that's what's been holding Apple up. Money comes in, more money goes into Apple than anywhere else. But when money goes out, more money goes out of Apple than anywhere else. And I think we're at that point. The big thing to watch is, they're going to do their earnings report Thursday night. They're already telling us that their latest version of their phone is not selling as well as they expect. I don't know if that's trying to push down the expectation so they can beat it. But be that as it may, this 151 area we got up to, ironically, and I just pulled these. I didn't even look to see that. It came up here and it failed. Okay, at the 78 here on this weekly chart, on this weekly pull of the fib, going into their earnings report, painting out a mini head and shoulders pattern, Phil.
Right.
This thing pushes back down to the 126 area here. You're talking a 60-point move down from here, which takes you down into the 23. And guess where 23 is?
Yep.
Right here. So our expectation for Apple is, like I stepped over your Phil, I'll be quiet in a second, is we're going to get down to this level here at some point in 2023.
The only thing I was going to say was that that's down there toward those COVID lows. But Apple, it's like the best fruit in the tree, so maybe it's the last to fall kind of situation here. But you're right, though. It really does seem to be the market, because how many times do we end up watching the S&P 500 and like, okay, let's go look at Apple. Apple's up, market is up, and it's moving up in the 15-minute chart. The S&P 500 is moving up. It really just dictates and heavily influences the S&P 500. It seems.
Yeah, and you just gotta keep an eye on it. And look, they're manufacturing a country that just went hard right, and is looking to settle some scores with the U.S. And what better way to settle a score is to, hey, we're going to screw with your Apple production here in China. It would bring the stock market down. So
Right.
maybe I'm being tinfoil hatted, but I could put on the evil hat on too and say, well, how can I screw up the U.S.? Here's one of the ways. So just bear in mind that Apple's in a precarious position here, and I don't think it's a wall of worry to climb here. These are the cliffs of Dover, and we don't have climbing equipment. And I think this is going to continue to push down as well.
Yeah, and guys, let us know your thoughts on that, on what Bob's saying about China.
Yeah, and you guys can agree or disagree with me. I'll follow the charts, but I'm trying to give you guys some macro on this because I think people are too willing to see a pivot and move higher. As some of our subscribers in our VIP room will tell you, is when the Fed pivots, we actually get our biggest fall.
Right.
So beware. What is it? The king is dead, long live the king. The pivot is dead, long live the pivot. Right. So it could be a situation where this pivot is not what people think is going to happen.
Yeah, it's like everybody wants to pivot, but in reality, historically, that's not a good thing.
No, because it tells a different story.
Right.
Now here's Google. Sorry, cut you, Phil.
No.
Now you're looking at Alphabet, and they just reported, and it was a bad report, and they're coming back down again as well. And so if you look at these, I didn't draw a fib on
Bob, real quick. There's Goog and there's Goog L. Can you just explain the difference? Because I get a lot of questions on that.
I think they're different classes of stock.
Yeah, Class A.
Class A, Class L, and it has to do with voting and stuff like that. I always just look at the Class A.
But they move the same, more or less, right?
Yeah, pretty much.
Okay.
So I'm just going to do this really quick here. I forgot to put the thing on here. So you're looking at 2019 bottom here. You pull a fib up to here. Okay. And then look at this. This is coming down to 38 retrace here. That's probably in the bag here, 88.15. And then the 23 is at 73.38. I think what Google is that they have a lot of cash. I don't think they've been as stupid with it as these other guys have been. But I think we're going to come down to here's the test the high of the pandemic. Here's the low. So, I think these guys are, a lot of these are going to fall in half, Phil.
I think so too.
I hate to say it, but and this is not going to be like crash. I mean, it could crash, but I think it's more of the long goodbye. These Eiffel Towers tend to mirror each other. So, it took nearly 2 years for it to get up. It's going to take probably 18 months for it to fall. Okay.
Right. Like we think Q1 to Q2, and I think that's where some of these, like some obviously are down there already. I think some of these better hanging fruit will follow suit eventually and get down there. But like Bob's saying, it's going to take a little bit of time. But that's our general view, and I think Bobby agrees that Q1, Q2 probably finishes these off. Yeah,
because we've already started selling off Q4 of last year.
Right.
So I would say Q2 of next year, put 18 months in there, and I think we're going to see the dump. Okay,
right,
here's
so next
Netflix.
up is Netflix.
Yeah, sorry about that. Yeah, Netflix. So Netflix has already got destroyed. If you noticed here, and already did a negative.
That's incredible.
Fib extension, yeah. So now it's climbing up. It's going to hit our fib wall here or ceiling, and I think if it even gets to 345.41 area, I think this stalls the move. And what happens in these moves here is that once you break down like this and you've broken your parabola, just have to look at silver, okay? You're broken for years because money is going to move into other sectors, and this sector is broken, okay? And I just wanted to show you, this is one of the FAANGs that has basically been decimated.
So the big resistance level there for the listeners is which?
Yes, 345.41.
And we're currently trading just under 300.
Yeah, and just so people know too, right here you can see the symbol up here, okay? Because sometimes when we do these videos, if I just print screen them or capture them and move over to Phil, they don't show the
Yeah, we got symbols today.
The symbols today.
We heard you loud and clear out there.
Yeah, I reserve the right to forget. Okay, so then next one I want to show you. So we got the FANGs here knocked out. I'm going to do the FANG T here. I'm going to show you Tesla. Now, my personal view on Tesla is, believe it or not, I like Elon Musk. I like the fact he's innovative. I know he's a grifter. I know he's weird. I know he probably cheats and does all this stuff, but he does some really interesting things. And sometimes you have to deal with some of that to get some of the innovation out. And I'll tell you, when Starlink comes live and SpaceX comes live on the open public markets, I'll be a buyer. Now, probably what he had to pay for Twitter, those things will probably come to the market sooner than later, and people will be buying them up. I mean, we should do a show just on Starlink, Phil. I think it's awesome.
Mm-hmm.
But having said that, I think Tesla is basically a worthless company, and we can do a Tesla expose anytime anybody wants to talk about it. But they can't generate the cash flow. Competition's coming up against them, and the battery technology today may not be the battery technology in 10 years. And people can't even afford a car to try to afford a replacement car. And how are you going to afford it? How are you going to buy an electric car if you live in an apartment community and you got to fight with a charger with your neighbor all day long? So it's a recipe for disappointment coming up. And look at this chart here too. So I painted left-hand shoulder, hit a head. Everybody said, "Oh, here comes the left shoulder," but I think this is kind of convoluted. And now we're down at a neckline right here, Phil.
Right.
This area right in here, and once again, I just think it's going to come down. It's going to test the $100 area, all right. But my personal view is, I think this number gets hit, and you can do the market cap on a $13 stock for Tesla. It's still in the billions, okay. Still in the billions.
It looks like we start losing what level there? About 175 to 200.
Yeah. So right now it's 209.74 area is the area that and the thing what I'm telling you guys here, this is not like trying to go out and day trade and time these things.
Right.
You watch these things when they start breaking fib levels, they tend to move as packs, okay? Yep. Because money moves out of SPY or S&P, and then they all got to get sold, okay? And that's why I'm bringing this to your attention. In some ways, they're a flock of seagulls, right? They're going to fly together. I should say pelican seagulls are all over the place, but they fly in formation a lot of times, and the market will force them, into. And the reason why we have our liquidity charts, no matter how different you are, you get forced into the broader action. And so Tesla might be one of those things where Musk starts getting detoured because of all his other ventures, and you get a big player coming in, and all of a sudden maybe Toyota goes hydrogen economy because you can't really do electric in a country that has 90% rentals now, so Tesla's at risk, and just watch these levels. But again, these are failures. Look at this: lower high, lower high, lower high. All right, that is not good. And if you want to talk about this, you can look at this. This is a descending triangle. Okay, and you take 414 down to 220. That's a $200 move. Okay, brings us to where? $13. So be careful, everybody, on these guys.
Yeah, and $13 you think is far, far away, but that's below. That takes out the COVID lows, which Meta or Facebook has already done, right? And It seems like we're as these fangs shrivel up and all their teeth fall out, they're kind of piling into like the last of the names. So like, and Apple probably is the best one, right? And they'll be the last to go. but Netflix and Meta, they're leaving that, so they're already down there at the lows. I think that's just telling us where this is headed by the time this bear market finishes off and washes out.
Yeah, and I mean, look at Netflix. So people say, "Oh, Netflix. Look at this. When you get unloved, you're gone."
I mean, it smoked the COVID lows.
Smoked it. So that's how fast you can lose these things,
Yeah.
So the last one to show you guys is Microsoft. And I think we're doing okay with time here, Phil. So Microsoft's my favorite of all the FANGs, but it can't avoid what's happening. I think they've done all the right moves. This move higher was smooth. It went parabolic here at the end. But I think the sell-off's going to be smooth too. And, I mean, sophisticated people could be, you short the worst of the bunch and you go long the other bunch, the pair trade. But I like Mr. Softy, but same thing. They had bad earnings. They got sold into. They did a bearish engulfing pattern here on a weekly, which is huge. So now if they break this 224 area, we're looking at 194. And people say, "Oh my God, it only brings you back 1 year." It's not like this like 20 years worth of stuff. these moves that climb this fast get sold this fast. And so again, once again, and look where COVID low is at 139. So I think we're going to come into this range with Microsoft too, Phil.
That's a pretty good eye-opening way of looking at where we're at in the big scheme of things, and how those weaker players in the FAANG basket are already kind of giving us a clue of where this is headed. Pretty interesting stuff.
Yeah, and I think that's all I have to show you today. So okay. I'm going to take it off share screen here.
Okay, well, that's thank you, Bob, for sharing those charts. Any final words?
No, I think I yacked enough. My only caution is that, we haven't really begun the bear market yet. That's my only point, and people just need to be careful. Going to be tons of opportunity to go long on the micro level here, but just remember the beasts are bleeding, and they're gonna drive the market down over time.
Awesome. All right, well, guys, let us know your thoughts on what we covered today on these stocks. Do you agree? Do you disagree? I'd love to hear from you. And as always, we really appreciate the views and the feedback. Thank you for watching, and please hit that like and subscribe button. It really helps out our channel a ton. And all right, Bob, well, I guess we'll catch them tomorrow. And until then, guys, have a great evening. Stay safe out there. Bye-bye.
Great. Thanks, Phil.
Trade Genius.